Hello, Gordon here. You're welcome. Today I'll be sharing with you how I caught this beautiful trade on a Monday morning. It's actually a Monday morning here during London Open and a beautiful week. So the week started out in greens, which is very lovely. So my five simple steps CRT plus OTE setup. Like I said, it's repeatable and it is duplicable. What that means is that if you were to take out of 10 trades, you can easily get 7 out of 10 trades. So it's not that it's an holy grail. Then the best part is it doesn't matter if you are a scalper, a day trader, a swinger. So if you are new to trading, you can start here, and if you've been around, you can decide to just take a look at this and see if it's worth your time or your energy at all. So this system works for all. Most traders often complicate things, but they just keep it simple here. No guesswork, just a clear, duplicable, repeatable process you can use every single day. And that is if the market chooses to present this opportunity to us, we're not going to try. Even with these steps, there won't be any need for us to want to force any trade or force any entry at all. So without any further ado, let's dive right in. Now I'm going to erase everything and start afresh. What do I see? What do I look out for when I get into the market the first thing this morning? What was it that I saw? Why did I decide to take a sell trade today, not a buy trade? And so let me just quickly wipe everything clean here, and we'll go on from there. All right. So earlier this day, Monday, 27th of July, 2026. If I were to just take an entry from say here, and say buy or sell, it might be sort of more like I'm gambling. I might not really be able to tell. How do I even know what I'm to buy or to sell here? I'm not even using an indicator in the first place. So that's what brings us to the first on the list, which is daily range. We need to have or establish a daily range in order to be able to execute any trade, in order to tell whether or not we're going to be buying or selling. So earlier this day, you can see the time here down here. This is as at this kind of formed last. I started last night around 10 my time here in that's during Asia session Sunday, and the following candle here is around started around 2 a.m. my time here. And then this one here that started the distribution down to this very target here started around 6, which is 7 a.m. 3 a.m., 2 a.m. New York time. All right. So how did I decide to just buy? And then what's a daily range? Daily range is simple. This the most recent leg in a price move. So we want to first establish: are we in a buy trend or a sell trend? What kind of trend are we in, or we are ranging? If you look from this very day here, I'm on a daily chart now. July 15th Wednesday down to the very day Friday. Market closes at this very price here at this point on Friday. It apparently it looks like we are going down, like moving. You can tell that highs have been raided. I just want to wrap it keep this video under 15 minutes. If there's need for you to reduce the speed of this video, you can do so. All right, let me just dive to 1 hour. So I have like a weekly separator there. From this very high here, you can see that it appears as if highs we get raided or get haunted, and lows get broken. The same thing in highs and lows, highs and lows, highs and lows, highs and lows, down to this very uh, point here on Friday evening. So we have the most recent leg from this high, and you can notice that I have more like already yellow line drawn here, and that's as a sort of a concept referred to as the SMT, which we'll be talking about later in this video. So corresponding to um, a pair, which is the Euro USD, is the SMT pair to that of the Pounds USD, which we are currently on. There is this high appear to have raided this particular one here, and then we have the most recent leg. And with that said, go back to like the 4 hours time frame. With that, I on this particular at this particular time, this side here, all these candles here had not yet been formed. This is where we were at when I woke up this morning. So what I would do next is just quickly go here, draw my fib, my use my Fibonacci ratio from that high to the low, and there is more to establishing a daily range, which if I were to start to explain and show more examples, I won't be able to capture all of that in 15 minutes. So if you want me to release a video on that, you can leave me a comment in the section below. All right, so here, already now from this high to this very low here, we have the most recent price leg, and like I said, it appears as if we have been going down, like the trend has been downward. So I'll be more inclined to selling on this particular day other than just coming in and randomly buying. So I'm more inclined to selling. And then one other thing before I move on to the next step, which is the PDR raise, which as well this as well leads to the PDR. The next step is, in order to establish a daily range, there's some things that must be evident in that particular price leg, and you can see here from between these two candles here, these three candles, there is a gap. It's an inefficiency in price move from up here to down here. So this is a sell side inefficiency, buy side imbalance. There's an imbalance that is a CB, and between these 2 points, there is another other block here, an imbalance, and they are corresponding or relative equal highs here that this Sunday price action has come to take or rated. So we have highs and highs in this range, and we also have like you can call it FVG, you can call it inefficiency, and you can also call it an order block in this leg. So with that, we have an established daily range and where we are likely going to be selling from if at all we want to set this. And in order to buttress why we're using fib here, I can see this green line here is 50%. So if I were to zoom in on the trading floor, the smart money guys won't be, of course, who will want to, if I'm too fast, you can reduce the speed. Who would want to you know buy, who want to buy at the premium price and want to sell at the discounted price. So the deal is we want to be buying from below here to up, and want to be selling from above here, which is the premium price range, to the downside. So this is what we have, and with this we can move now, look out for the next step, which is the PDR raise. That has already been explained. The PDR raise, that's premium discount raise. Like I explained, in this leg now we are in a down leg, which is a selling leg, and in this array, in this dealing range, we have the inefficiency, we have the order block, and we have highs. So these are ranges, these are arrays, these are the key levels that price could possibly reverse from if your is going to continue selling. And that said, we were still here that morning. That said, it takes us to the third step now, which is the turtle soup. What that simply means is you can as well just call it raid or stop hunt. There was already a turtle soup here, like a range. This high here getting raided. If stops were here and people were thinking, the crowd were thinking it's just going to keep tanking, going down. There was a price range here that has come back up to take the sellers from this particular range into this PDR inefficiency. And then you notice something. This is fantastic. Look at this body here, the closure of this body, and what the wicks are doing. It opens here, goes down, then comes back up, goes and come back on to close here. This is an inefficiency. If you were to use your fib on this, you'll notice that at the midpoint of this, the price is respecting the midpoint of this what's it called now, CB or inefficiency or IFVG, which indicates one thing, that price is not ready to go more up. It's just doing the damage, causing more harm than more arms. They're just taking out early sellers, taking out early sellers. So that in itself is turtle soup, but I'm not just like an indication there. So I will put my since now that we are here, the range is established. We are in this premium discount array, which is a discount array here. This high here as established, and then we have this one that started by 2 a.m. my time here, which is most likely going to be like around midnight or very night, late nights in the US, into this particular range. And what happens next? We'll have this range drawn. So that's actually what takes us to the with this. Now we can see that we have a 4 hours range from this high here to this low candle range that we want to trade, even though we know that price has a higher tendency of coming down to this very low. All right, because this is actually like more like that hanging fruits objective. Price going down, comes back to the midpoint here, and then we'll come back and take this high low. But rather than trying to catch all of that, we can just repeatedly and catch this each and every time present itself. So this has a higher probability compared to trying to catch all of this move. All right, so as at this time 2 a.m. when it formed, was still asleep. I didn't really see that. I was there until I woke up. So that will take us to the fourth, which is the model one, or change the state of delivery. So the based on the CRT model, the corresponding lower time frame to that of the higher time frame 4 hour is the 15 minutes time frame. And then I want you to just pay attention to what we have here, so that I will just pay attention to this. Now, like we established earlier, from this high here to this low, that's our daily range based on some other reasons like having PDRs in it, having highs in it, and the likes. More on PDRs, leave a comment. I can make more videos on that. Now this is the 4 hours range. As at this time, this is what we have. As at this time, when I woke up around I don't. Oh, this is 1:30 a.m. When I woke up, say 5, we were here. Price was here, and all these had already formed. So already these highs had been taken. This last 4 hours range, which was around my time here, Monday 1 a.m. Must be nights, like 7 hours back in New York, into this FVG. And don't forget, on the higher time frame, in 4 hours, we have that inversion. We have not inversion, I beg your pardon. We have this CB that the price is not actually going beyond the 50% range, right? The consequence encroachment of that. Shout out to ICT, Michael J. Hudson. All right, so with this, we have the last bullish candle that takes out the previous high. So this is the high of the H4 candle, and this is the last bullish candle that takes out that. By the time we start to have closes below this particular candle here, let me zoom in. By the time we start having closes below that particular candle there, with that we can say we have our model one, or that this market here is ready to start tanking. Distribution phase is ready to get started. But I just want, should I use the word caveat now to this? Is as at this time, it was around my time here, it's the Asia session. Asia, Frankfurt, which opens around my time here, 7, which is by US, is 2 a.m. Frankfurt just opened here, and then London opened around this time, around this particular candle here. This is 8 o'clock my time, which is 3 a.m. New York time. Okay, it's not really the best time to want to enter a sell, because sometimes when London or Frankfurt opens, it will go take out the high of Asia before then tanking, which it did on Euro USD. I'm going to show you that later as we go on. All right, so like I said, this is the model one, the last bullish candle that, if it were, this is actually a sell scenario, the last candle that actually takes out the low, the high. If it's in a buy scenario, it will be the last candle that takes out the low. So with this candle, this is going to be served as a catalyst that will send price down to the opposing liquidity pool down here. All right, so I didn't take the trade. You can see the video on the left corner, right corner of my screen. I didn't take the trade onto this very candle here because I wasn't sure if it's going to just keep going up. But yeah, so even though the candle was established here, the timing wasn't right. So this is actually the point where the price and the time meets. As at the close of this candle here, this bearish candle, as it closed below this one here, this gives me a confirmation. Plus one other ingredient which I'm still going to emphasize on, from this high to this high here, on the corresponding SMT pair, which I'm going to talk about the comparative analysis in a short while. Euro USD are taking this high, but pounds didn't. Which with that I already knew sellers were already getting into this, and their distribution phase was already getting started. So with that, we have a change in state of delivery here, which this continues, and then we have our order block, which is the first step. So first step, daily range. Second, PDRAs in the daily range. Third, we want to have or see highs being raided, because if we are going down, highs will be raided and lows will be broken. The reverse is when we are going up, and they will stop on, top to sub raid or stop on. Then we want to see model 1, that's the order block or the change in state of delivery, and then we lock in, just lock in whatever it is that you want to risk there. All right, so with that said, the fifth one, it's not like it is super duper necessary though, but it is actually to an extent. Fifth one, you can see high FVG, which is inversion FVG, or SMT, which where I sometimes call this SMT a comparative analysis, when you compare two pairs assets together. And let me zoom right in. I might have to drop lower down to even 5 minutes to see this clearer. You can see here that the last candle where we got this our model 1 here, this candle here, in raiding, in taking out the people here, taking out this very high, there was a fair value gap created, and then the moment you took it, it's almost immediately reversed, thereby creating an inversion FVG. So when this is created after taking a considerable high here in this key time in the Asia, it often suggests or indicates a reversal. But I didn't enter until London opens around 8 o'clock my time here. This is actually my entry. You can see the screenshot there at the other side. So with this, it takes us to the fifth. I've explained the IFVG and the what's it called now, in terms of talking about the SMT. So what I do is comparative analysis. So what I share my screen to two, and then I compare these two assets. Already we know that dollar is strong. That's a story for another day. I will have loved to pull up my, okay, let me just quickly do that. Look at this. This is actually beautiful. Look at this. Look at this. All right. Dollar is strong in a sense. You can see from here, this is a low it took, and then just keeps on going up. This is actually where we were at when I woke up this morning. And then you notice that this high, we had a new high form and a retracement back into the order block, which is that price point that's going to have as catalyst to send price even more up in this buy scenario. So this is where we are at this point here on DXY, which is the index, dollar index, US dollar index H4. So at this point in this particular last seller candle before the bullish impulsive move, we were there again, right? Price is just going to react to that key level, and correspondingly, that was more like the scenario here on pounds and GU, right? It was in a key level. This was also in this other block here, the last bullish candle before, which is the reversal of that of DXY because of the pair. Now, talking about SMT, you'd notice this very high that I mentioned earlier, how that this high here and okay, and this high here, this one is actually the high here. This one raided the previous high into this range before then banking dumping down, which makes this here, this high and this high here daily range. And then there are more to daily range. We can discuss that later. Okay, just focus on the entry for now. Drop down to 15 minutes time frame. This is actually one key thing that if you are the type who likes to more like capitalize on a single move and then with that you are done, like one shot one key kind of person, This is actually one thing that you want to really pay attention to. Okay, and if you like what I've been this so far, you can drop a like button, and as well subscribe to help the channel grow. All right, so here, like I said, I was explaining, this is actually EU/USD now. This is that model one, the other block, which gonna supposed to act like a catalyst that will send the price down to the opposing liquidity. Now what happens? London opens here, or the during Frankfurt session, it's going to take out the Asia high, which some people just see as Asia high is being raided, and then we have our model one here on the upon the close of this one. This is where our model one is. Model one here. All right, this is actually that one inversion IFVG. In a way, there's sort of an inversion if I to drop down to the lower time frame. We have our model one here, so you would draw this, and by the note that even at this time where this one was forming, model one, and we drop that, and this also was forming here, so just it was happened simultaneously. I could have taken this and as well taken this, but I just choose to just not over leverage just because of one classic A plus trade is playing out. All right, I don't want to blow my account because what if I mistakenly take out 3 losers out of the usual 10 trades, that because that's what the stat says, right? 8 out of 10 trades winner. What if these are the 2 trades that might possibly lose? So I just don't want to over risk there. So with this, you can see that this high got rated on Euro USD, but on pounds it didn't. So this suggests to us that the market makers, they are done. This is actually one because it's called smart money divergence, or smart money what's it called now, techniques. It's just one way of actually showing, or doing their thing, when especially when they want to just get to hunt highs, or stop hunt, I beg your pardon, and then they take the price the right way around. All right, but there's something else I just didn't mention, which in a way I did. That is this key time. I didn't take this trade until this London opens. I could have taken it during what's it called now, Frankfurt section. I took the trade here. This is exactly where I entered. You can see this short, and I went for just 1 to 3 straight up. 1 to 3. My stop loss was here. That was more like the point of invalidation. If in the event that price choose to come back up there, it means that I'm wrong, right? So I entered there, and then I entered there. So it's exactly when London opens, which some people just refer to as this. What happened here as 3 a.m. 3 a.m. purge in the New York, like in USA. But my time is just London open 8 a.m. and I lock in. So this is why exactly why I call it more like a beautiful Monday morning. So with these 5 simple steps, the system is repeatable, and it's replicable anytime, anywhere. You can look at the chart. Once the daily range is established and you have your PDRs in that range, you can get an optimum trade entry. So you don't want to be trading, that's a optimum trade entry, that's OTE. You don't want to be trading or selling at the discount and be buying at a premium. No. All right. You, of course, logically speaking, no one wants to buy at premium or want to sell at discount, right? To make the best or the most profit. I want to see a total super rate of highs and lows. That happens almost twice. What happens there on a what's it called now, on EU, is what refers to as double purge. There was a purge here and another purge during London Open. Those are the more like things that one wants to avoid. This is actually what patience will give you if you wait for that key time to come to you. Now, and then the fourth one, model one, you want to see a change in state of delivery, your order block form, that catalyst that will send price with opposing liquidity. And in addition to that, you want to get IFVG. That's actually one strong indicator that market's about to reverse. And sometimes if you're doing comparative analysis, SMT also key. So this what has just happened here on this Monday morning, 27th of July 2026, is just that simple. Good old saying, what's it called now? Trend is your friend, hanging fruit objective. This is actually an hanging fruit objective, but I got out around my 3R area, which just fits my model. So with this, I'm gonna stop right here. And so if you have any question, do drop it in the comment section below. And if you want me to make more videos on this, do like my video, and that will help my channel grow. Thank you.